back, everyone, to another edition of the Forex Market Preview. My name's Jason Stapleton, and as you guys know, I was off last week. Went out and played a little bit of golf. Took my kids out to see my grandparents, and spent 3-4 days on the golf course, which was a lot of fun. But now I'm back. But being gone all last week, I watched the markets as I always do, but I wasn't engaged with them at the level I normally am. So what we're going to do now is I'm going to kind of just run through some analysis with you guys based on what I'm seeing here and what I picked up here over the last couple of days of just doing some analysis into next week. So we're going to get right to it. The first thing I want to direct your attention to is the pound-dollar trade that we had. Now, this has been about 2 weeks in the making, but we called the short position. And market came all the way down in, and we actually hit target one. I showed you guys the risk reward that was there, about 225 pips on that trade. So well done, all of you who took advantage of that. Now the next play is to actually wait for a trend continuation down to about 5,800, or potentially all the way down into about 57.50s, 57.30s. You see the structure support line or previous resistance line here? That should become support. Now normally we would take off at the 382 and the 618, but what I was suggesting to you guys a couple of weeks ago was, hey, you may want to shoot for a little bit of an extended target and just tighten your stops up. So in this case, had you taken this short position with target one being hit, your stops would roll to break even, which in this case would be about 62.25s. And I got some questions saying that they were having trouble reading the numbers, so I did fatten my numbers up this week, so I hope that helps some of you guys see it a little more clearly. Let's move on over to euro-dollar. Euro-dollar still playing here in the middle, trying to decide what it wants to do exactly. And as you guys can see, or if you'll remember from 2 weeks ago, we had the high level and the low level, basically previous structure resistance, and the market trading in between that. Now, we've had a pullback followed by a retracement, and now what we're looking for is somewhat of a projection down in. And if I drag my line tool, you're going to see just how nicely this works out. So if I grab my line tool and I drag it down in like this, and we're measuring basically the length of this retracement here. And then I go ahead and I take that line tool, or that line that I've just drawn, and I project it based on where the retracement came in at. Look at how nicely we get a nice ABCD pattern down into 127s. Now 127s has kind of been an earmark for us for a long time here. It was very nice resistance back here in April time frame, and now the market could potentially project right back down into that, and it'll be a nice buying opportunity, especially now that you've got that ABCD pattern coming in there as well. So be on the lookout for that this week. That could happen this week. We could get a nice downward momentum, and of course if the market breaks above these 130.75s level, that's going to negate that trade. So keep an eye out for that. Euro yen, same kind of thing setting up here. We actually have a little bit a Gartley pattern here. If I'm going to go ahead and fatten this up and show you guys exactly what I'm looking at here. You have basically from the low level here, if I grab my line tool again, our anchor leg is actually right here. I'm going to grab from the low level here all the way back up. So this is what would be considered the X to A leg, those of you who are students of mine or who are students of Fibonacci and advanced pattern recognition. And what we're looking for now, we would look for two basically 618 retracements here, which we do get. One of X to A, as you can see, coming right down into the 618, and then of A to B, coming right up into the 618, not quite to the 786. So our qualifiers are met for our Gartley pattern. All we need now is the projection using our Fibonacci extension from swing high to swing low and back down in. Let me see if I can get it in there right. Come on, there you go. At around a 127 extension, and you guys can see 98.50s is that 127 extension. Look left, there's your structure support level. So all we got to do is have our stops below the lows in here at 97.87. So we're going to look for those of you who are having trouble, who are not following me very clearly, we're going to look for a buying opportunity at around 98.50s. That's what I'm going to be watching for. Now, may get here this week, may not. Kind of the same thing with the euro. May have to wait on it a week, but we'll get there. I'm going to leave Canada alone for right now. I want to show you something on Aussie dollar here in a minute, but let's go to the pound yen. Pound yen, we have been watching a potential bat pattern set up for a potential sell around 130.50s. Now that hasn't happened yet. The market's kind of traded in here and kind of thrown around a little bit of junk, but we're coming into a potential Gartley pattern buy. And I'm just going to erase a lot of the work here just because it's to save us some time. But you guys can see, again, ABCD pattern coming right into about 124.34s. Look left, there's your structure. So potential buying opportunity around 124.36s, 35s, with anticipation of a move higher up into a potential bat pattern completion at around 130.53. So a couple of patterns setting up, and you'll see this happen again and again and again. If I dig a little deeper, I can find some more stuff in here, but I don't want to confuse anybody. Point being is that once you start to recognize these advanced patterns, they'll start to appear all the time, and it'll give you multiple trading opportunities within, basically within the same time frame as is happening here on pound yen. One other thing, let's go with Aussie dollar right here. Now I'm going to show you guys something that's kind of interesting here on the Aussie dollar. We've had, nice downward move here previously, then we get a nice retracement, market comes back in, double tops, back up against that resistance level, and then we pull back down in to 102s. Now, those of you who follow me every week know that we've watched these 102 areas for potential buying opportunities, got that double top. Now the market's come back in, and we actually retested previous structure support. There was a very nice double bottom that had kind of set up here between these two, this retest of the low. Here's the interesting thing, is this candle right here. Okay? This was the beginning of the week. This was Monday. Okay? Actually Sunday night for me here in the U.S., but depending on where you're at, it was at the market open, basically. Look at what happened. The market gapped below structure. We gapped below structure. That means that this market did not hold structure to the downside. This is a big red flag for me. Okay? This screams we're going lower. All right, now I don't know where that's going to happen at. I'm going to be watching it on some lower time frames to try and find an area to look to get short. But basically, with this market gapping below the lowest low of that previous structure point, that's a big red flag to me, signaling that the market wants to go lower. A lot of selling pressure there. If I come down here, the 4-hour chart, and we take a look, I don't see anything right in here yet. A little double top in here, but the market's already oversold. So what we may look for is a 2618 trade here. For those of you who are familiar with the 2618 trade, basically Fibonacci retracement, swing high to swing low. Looking for that 618 retracement around 102.64s. There is a potential here that we go quite a bit higher. If I go back out to the daily chart, I'll show you. If we go out to the daily chart, there is a chance that we run all the way back up into this little structure area here around 104.23s, 104.20s. If you look here, you'll see you got the resistance level here that was held up. You have a support level, another support level, and then you got a little bit of chop in here as well before the market broke down. So there is quite a bit saying that we may see a move as high as 104.27s. So just keep an eye out for that. You may try once or try twice, trying to find the right point to sell this thing at. But in my estimation here, that gap lower, that open below the previous lows, is a big red flag that says, hey, this market wants to go lower. So dollar bullish here on Aussie dollar. That's pretty much going to do it for this week. Like I said, I'm just getting back into the saddle here after having about a week vacation. So we'll carry on into next week, and I'll show you a couple of other things that are setting up as the week progresses. Now, last thing, I'm doing something kind of cool next month. So I don't want to tell you what it is yet because we're getting all of it worked out, but we're going to be doing something next month that you're probably going to want to be around for. Now, it's not a big event like we normally hold. It's nothing like that. but I'm going to be sending out an email to you guys and talking with you guys about something that I think is pretty cool. So be on the lookout for that email. That's all I got for this week. Until next time, good luck and good trading. I'll talk to you soon.